So hey everybody, I am Kevin. Many of y'all know me already. I am the founder of this group. And now in the United States is tax season. So we have partnered up with Happy Tax to kind of help people in the crypto world figure out the crypto taxes, because there's a lot of misconceptions about it, a lot of questions that people aren't really sure about. And so they have the expertise in this field, which they are gratefully sharing with everybody through a variety of means, not to mention this live stream we're doing right now, live stream and Q&A section. So we're going to start out by letting them introduce themselves, move to some pre-scripted questions, opening up the floor to questions in the comments below. So feel free to ask us questions as well in the comments, and then finally wrap it up with a conclusion. So Mario, Scott, welcome.
Thanks, Kevin. My name is Scott Levingood. I'm the director of our crypto tax division. I've got about 13 years of experience in the tax world and 4 to 5 years of experience in the crypto world. So we're launching a nationwide platform to be able to help people with their crypto taxes, and we're excited to be able to share this information with you and your group on all the questions that they've got, because I know there's a lot of people out there with a lot of questions. And now here is our CEO, Mario.
Thanks so much, Scott, and thanks, Kevin. So my name is Mario Costanza. I've been an entrepreneur for the last 20 years or so, 20 plus years. In the last 16 years or so, I've been in the income tax preparation business. I started out doing income tax returns on the side, built up my own office, and eventually scaled that to 99 tax offices in 5 states. In 2014, I sold those offices and started a firm called Happy Tax, which is a new innovative way to file taxes without having to go sit in an office. It's a mobile tax service, and we've scaled that nicely as well. We were recently ranked by Entrepreneur Magazine as the fastest growing tax business in the US, and also in their yearly ranking for 2018 of the #2 tax service, right behind H&R Block, which has been doing this for 60 years. So I'm really excited with the great team that we have here at Happy Tax, and being in the crypto space for a couple of years myself as well. I saw the need for being able to help crypto traders with their tax return preparation because it is income, and the IRS does require that all income be reported and taxed if there's profits. There's a lot of misconceptions in the space, and we're more than happy to help clear that up here, answer any questions you have, and announce essentially to the group cryptotaxprep.com as a viable service if you do need help and want some assistance in getting your tax returns filed as a comprehensive solution. But we're not here to really talk in detail about that today. It's more about you and what we can do to help you and get your questions answered here. And I want to thank Kevin once again for having us here. Thanks, Kevin.
Thank you. And so as part of this live stream, I want to first ask a couple questions to get to know your company, Happy Tax, a little bit better. After that, jump into some commonly asked crypto tax questions, and then see what questions the audience has as well. So you kind of touched on what Happy Tax is a little bit already, but how long have you guys been in business again?
So Happy Tax was founded at the end of 2014.
Okay.
But this is my 16th tax season that I'm going into personally.
Awesome. Thank you. And you guys have roughly how many locations in the United States?
So we've had over 1,000 people join us as area representatives, franchisees, and independent contractors and investors because we don't have physical locations. Our model is a virtual model. We're a virtual tax office that heavily leverages technology, our mobile app, our website, to be able to make things more convenient and more professional for clients to interact with us than having to sit in a tax office or wait from some unlicensed person to prepare their tax return for them.
Right. So is there like face-to-face interaction, or is it all through online communication when working with Happy Tax?
Yeah, so it can be either way. We can have a representative go out and meet with a client to help them to put their data together and send that over to us. Then we have a group of US-based licensed CPAs that prepare all those returns, and it's a relatively quick turnaround process if there is no crypto. When there is crypto, it takes a little bit more time to get everything reconciled. But we've got specialists. We've built a really nice tax department that has over 100 CPAs and accountants in it there to help people to file their taxes, and specifically the bookkeeping and accounting piece around crypto, because it's not just there's no 1099-Bs issued, which is what would be issued if you're buying and selling stocks. So that data has to be pulled down from the exchanges, and we help and facilitate all of that for our clients. So it's very easy to deal with us, whether or not you have a rep come out, but you can also deal directly with us via Facebook Messenger, via screen shares like this, via phone calls, and via cryptotaxprep.com.
That's really convenient. Yeah. I definitely need to check that out too when I'm get my other tax filing materials. I can do it all at once.
Yeah.
Also, one question I had is, it seems like you guys started pretty recently and have expanded really rapidly. I was wondering if you can talk about how exactly your expansion has gone so well and what your strategy was there.
So, I mean, we're really good at marketing as one strength that we have, but we really believe in our service, and we believe in the fact that the industry, the tax prep industry, really hasn't evolved in 60 years. H&R Block essentially opened up the first retail tax location 60 years ago, but just like many other industries, retail is dying. People want a more technologically forward, advanced solution that works with them on their time, is more convenient, is one that is now you don't have to sit in a tax office all day. One of the other things that we found, and I did this, we started this business because I found through my experience when I was operating those brick and mortar type locations throughout the country that people don't like sitting in that waiting room. And then 60+% of all tax returns done in the US are done by people with no license whatsoever. So at Happy Tax, all of our returns are prepared by CPAs.
Awesome.
And we work on the assisted side of the business for people that do want help to file their taxes. Clearly, everyone has the right to be able to self-file, self-prepare, do it yourself on your taxes. And people that are technologically advanced and financially astute can do that. About 40% of people do that, and 60% of people choose to hire a professional, and that's where we come in to help people that to navigate the complexity of 70,000 pages of tax code, and the complexity in this case about crypto, how detailed it is in terms of being able to get it right.
Awesome. And just one final question from me on this kind of topic is, I saw the map on gethappytax.com. And it seems like your coverage across the states is like really comprehensive. I was just wondering if you can touch on that, like all the different locations that you have people servicing.
Yeah, so we're in I think 48 states right now currently. And because of the way that we interact with people digitally ourselves. We were able to find people across the country. We didn't have to go old school and say, hey, we're in this certain city, so we need to expand here. We were able to blanket the country to be able to service people, because if we didn't have people across the country, it would be very difficult to serve people that do want to meet in person. Again, our Happy Tax representatives will go to someone, meet with them at a Starbucks, at a hotel lobby, at a work location. Many of them even do house calls. So we really needed to get that coverage across the country, and we've done a good job. Our team has done a great job of that thus far.
Great to hear. Awesome. Now time to get to the part of this live stream that everyone's been waiting for, the crypto specific parts. I know a lot of people have various questions in this issue, but I compiled a couple. So the first one is, does the IRS consider cryptocurrency as property? And if so, why?
So yes, they do. In 2014, the IRS issued a notice that gave the IRS's position. If you're trading currency, generally, if you go to the airport and you swap out your dollars for euros, that's not a taxable transaction. But the IRS said, you know what, we don't feel that crypto is the same as that type of transaction. We feel that crypto is property. It's an asset. So they issued this guidance. I don't know why they did it. I assume they did it because they want to collect taxes on it, and they see that there is the world is changing, and that the IRS does require that any type of income, if you earn income in cash, that is taxable and reportable, and the same thing applies here. So there's very specific guidance from the IRS on crypto in that it is property, and that requires it to be reported as capital gains or losses on tax returns.
Awesome. And something that is probably the largest question in the crypto space about taxes is, do crypto to crypto trades, like, for example, buying, let's say buying Litecoin with Ethereum, is that a taxable event? Because many of us swap it like 20 times a day. So that is the one that's on people's minds the most by far.
Yeah, Mario, can I?
Yeah, Scott, how are you?
Sure. This is a question that comes up in nearly every conversation we have. And the concept of like-kind exchange is something that for the general public is, oh, I just call it a like-kind exchange and I don't have to worry about it. That I only have to worry about income in, income out in fiat dollars. And the reality is, like-kind exchange from an IRS tax code is called a 1031 like-kind exchange. It has very specific requirements. It has very specific exclusions. It primarily deals with real estate. Everybody's confused because the new law in 2018 was changed, right? So, now it doesn't apply, and it did apply last year. Well, the reality is that it never applied. It never happened to apply to cryptocurrency because the definition of currency being intangible property, the rules and regulations that go with the 1031 like-kind exchange, everybody thinks it's a headache to try and keep up with tracking every trade and every coin swap. If you realize the paperwork that had to go with it, it's a 2-page form that you have to fill out for every single like-kind exchange. They have to go through a qualified intermediary in most cases. Domestic to foreign does not count. If you go from a coin that was primarily for financial transactions versus smart contracts, they would be disqualified, even if coins in general qualified. But cryptocurrencies, as a general rule, don't. Over the last 3 weeks, I've talked to 60 CPAs, tax lawyers, enrolled agents who have a specific expertise with the IRS agents, and presented my position to them and asked on coin-to-coin swaps, do they qualify for like-kind exchange, or are they treated as if you traded a stock of Amazon for a stock of Microsoft? And in every one of those cases, they've said the same thing. That swap from one to the other triggers the taxable event, and you have to calculate your capital gains or loss at that time. I realize that nobody wants to hear that is the unpopular position, but that's the reality of it. Even if you don't go back to fiat dollars, you may have a taxable gain or loss that you have to report taxes on. You have a tax responsibility as a U.S. citizen to report that. And if you don't, the fines and penalties for doing that can be pretty heavy. The IRS is not a group that you want to play around with. Their criminal division has over a 90% conviction rate and over an 80% incarceration rate. So if you go up against them on a criminal side, you generally lose what you have and you end up in jail. That's not the set of odds that I want to go with. And the software to do the trade for trade is a lot easier to handle than the paperwork to do like-kind exchange. So be thankful they didn't qualify for like-kind exchange.
And also to add, if you did try to take that position of a like-kind exchange, you're sending it into the IRS, they're just going to deny it, and you've already kind of put yourself out there that you're going to have to pay penalties and interest. And those penalties and interest could be 50%. So you could pay back what you were paid anyway, plus 50%. So you're basically wiping out your profits if you tried to take a position like that. You just can't. It's just not allowable. You couldn't do a like-kind exchange if you exchange gold for silver, or as Scott mentioned, Amazon for Microsoft stock, and hence you cannot do it here either. And I know that that's hard because a lot of crypto traders trade a lot, but at the same time, it's also a very doable process if you know what you're doing and if you have the right tools and if you know accounting and bookkeeping to be able to get that along with some nuances that even the automated tools that are out there in the marketplace do not pick up on. And we can talk about that as we move forward through the conversation.
Awesome. Thank you. That was really informative. I think on the kind of on a side note of this is if we're not traders, but if we're not crypto traders, crypto taxes can still apply to us in a variety of ways. Like, how would it affect us if we got paid in cryptocurrency from our company?
So the same way it would affect you if you got paid in fiat. If you are doing side work, side gig, self-employment, you have to pay, you get to reconcile that on what's called Schedule C on your tax return, and you have the ability to take some expenses against that. But there's also not only taxes, but self-employment tax on income like that. And that's basically the IRS's way of getting Social Security and Medicare from people that are self-employed, unlike people that are getting their money on a W-2 where it's automatically withheld.
Awesome. And I know we also have a lot of miners, like cryptocurrency miners, who buy their own hardware and get a lot of Bitcoin or Ethereum. How does this affect them?
Yeah, so if you're mining, you will claim that also on your Schedule C. And you can write off some of that equipment. In some cases, you can write off the entire amount. In some cases, you'll have to depreciate that equipment, and you can write off your other expenses that are directly related to the mining. And it's very intricate on what you can claim and what you can't claim. In many cases, it's case by case, depending on the type of operation that you're running. And, that's, on a specific basis, if anybody had any questions, we'd be more than happy to answer them here. But you would need to talk with your tax advisor or do the true hardcore research to find out what you can and can't deduct in those scenarios.
Awesome. Another question I've seen come up is kind of related to the Coinbase news on how they're handing over information for people over 20K in trades. And some people are like, I'm not even close to that. Do I even have to worry about it? And so if you could touch on that, why it's important to claim gains, even if you have like way less than 20K.
Yeah, so the IRS sued Coinbase, for those of you that don't know. And during that process of that lawsuit, they negotiated. Lawsuits take very long generally. And they said, hey, let's kind of agree that if we'll expedite this case, Coinbase will narrow the scope. Originally, the IRS was asking for every single client record of anyone that signed up for Coinbase. And then they said, all right, well, let's make a deal. We'll agree to only go after people that have traded an aggregate of $20,000. Now, what that means is that you traded more than $20,000 in a given specific year. From 2013 to 2015. That was what the lawsuit was about, those particular years. So if someone made 20 trades of $1,000, or they made 1,000 trades of $20, you don't have to have $20,000 to be included in that. So what happens is that was about 14,000 people in that. The IRS ended up winning that case, and Coinbase was ordered by a judge to turn over the data, the KYC data and the transaction data. Clearly, the transaction data is on the chain anyway, but the KYC data along with the wallet info for those 14,000 as the initial group. The IRS has a position that they are working on the requirement of the ability to get all of that data for everybody. And the bad news for everybody else is that they will go back when they get that data. And anyone that, let's say you only traded $19,000 during those years, so you're like, oh, I caught a break, I'm not going to get in trouble. Well, you are going to get in trouble because we are very confident that the IRS will get all that data at some point in the near future. They've also hired a firm called Chain Analysis to use forensic accounting to analyze the blockchain and cross-reference that with IP addresses and known wallet addresses. They have a very detailed investigative unit, so they'll catch people anyway. And we fully expect that not only Coinbase, but all the other exchanges as well will be turning over that data to the IRS at some point in the near future. And the IRS goes backwards and they hit people hard with penalties, interest, and the taxes due. I mean, that's one of the things that, crypto is not anonymous. It's a public ledger, and the information is out there for everything that you've done. You can't get away from that. It's immutable. So you have to make sure that you are in compliance. If not, it's going to catch up with you. So that's why we advise that everyone does claim their transactions, whether or not they had 20,000 or not, because it is the law. We're required to claim any income that we have here in the U.S.
Awesome. Thank you.
Well, Kevin, just as a follow-up to that, a lot of people are confused about the 20,000, right? It's very similar to if you run a business and you use PayPal as your merchant exchange. If you do more than $20,000 of revenue through it, or more than, I think it's 200 trades, they'll issue you a 1099-K, which says this is how much volume you reported to it. But even if you only do $1,000 through PayPal, you're still legally required to report that. You're still legally responsible for that. Even if PayPal doesn't send you the information, you're responsible for it and reporting it. And if you don't, you get in trouble with it. And as Mario pointed out, the IRS has hired a group that knows how to analyze this. once they get enough starting points on this, they can start tracking wallets back. And the IRS is the only organization in America where you are guilty until proven innocent. So if they decide you owe them money, they're going to actually send you a request that says, Kevin, you owe us $5,000. We've decided that's what you owe us. And it's your responsibility to then go prove, well, no, I don't. I didn't send that to another exchange, or I didn't trade that. It's actually in my wallet. And then you give them your wallet address. Well, guess what? That's just one more piece of the puzzle that they can start saying, okay, that wallet belongs to Kevin. So any transactions on the blockchain that go into that, those are traceable. As Mario said, this is a public ledger. It uses cryptography to hide it. So it's public but secret. But once you get enough of those pieces, you can trace that all together. The IRS broke the Swiss banking cartel. They broke the privacy issues on it. The likelihood that they're not going to break this eventually is not very good. And you don't want to be on the other side of it, because as I mentioned earlier, some of these things are heavy fines, like half or more of the profits you've made. They can end up in time in jail. Risk reward says take care of it now and be on the right side.
Thank you. And I have a few more questions, but I was wondering, Scott, if you've noticed any questions from the comment section that you wanted that we could touch on?
Sure. The biggest one, I think we've answered most of the others, but there is one that says, how does the IRS plan on tracking this when you can't even find it 4 to 6 months in the past? Well, that's not true. There are a couple of third-party sources out there that do track Bitcoin price for all history. They've got it all reported across a variety of exchanges, and all your exchanges will provide you data that says your coin swap at this time had an equivalent Bitcoin price. And that's what you have to use, is that Bitcoin price to establish a US dollar price and then do the calculation. So the data is there. You may not have access to it, but professional traders do, and the IRS definitely does.
And if there is a specific exchange, and there are a handful that do not provide the actual cost basis, which is the amount that you bought a coin for or the amount you sold it for, we can use average cost for that day across multiple exchanges, and we have data sources that we pull from that can still ascertain that data. So all this stuff is doable. It's just a matter of making sure you do it.
Sounds good. Okay, two more questions from my end to wrap up this crypto FAQ segment. So I guess this is kind of similar to what you touched on just recently, but some people ask, what if all their trades are on foreign exchanges, like one's based in China, for example? Do they have to be worried about that?
Yeah, not only do they have to be worried the same way that we've discussed here today, but there's actually additional things. So again, still in the chain, the U.S. requires that U.S. citizens and residents report and pay taxes on worldwide income. So whatever you're earning money anywhere in the world is required to be reported on your tax return. Additionally, there is something called FBAR. And what FBAR is was put together a couple of years ago to make sure that people aren't funding terrorist organizations. So anyone that has over $10,000 in any foreign account has additional filing requirements on top of the reporting of the specific transactions. So, and the fines there are amazingly hefty. So if you have over $10,000 in a foreign exchange, and about half of the major exchanges are overseas right now, and the same thing applies to even decentralized exchanges like Ether Delta, etc. You are required to file these additional FinCEN forms, and the minimum penalty for having over $10,000 in an overseas institution, exchange, or anywhere that it's held is $10,000. If you're found to be willful, it's $120,000 or something along those lines. So the IRS does go after willful in almost every case. So if you have money overseas over 10 grand, you have to report it. We can help you report it and make sure that you stay compliant, because you don't want to be getting those fines. And, it's not like you could just say, hey, I'm not going to pay the IRS. Well, they'll garnish your salary. They'll freeze your accounts, including crypto accounts. They will tell Coinbase, hey, freeze this account. They will tell other exchanges, even worldwide exchanges, hey, we have a judgment against this person for this money. Send it over to us. So they can grab your crypto too. They've done that. We've seen that happen in other cases already.
Awesome. That's really interesting news. Or information. I didn't know that before. Thank you for sharing. My last question on this segment is, So all of this seems like a lot of work to be done, and you kind of touched that you had tools and software to help with this. Can you kind of further explain that?
Sure. So right now there's two major tools that are out there in the marketplace that you can use to do some of this crypto bookkeeping. What they do is they pull down data from APIs or permission exchanges to release the data, or sometimes you have to pull in a CSV from all of your exchanges, and they basically put together the trades in a format that can then be put into your tax return to report all those trades properly. And we've got traders that have tens of thousands of trades that we've helped to reconcile. Now, there's nuances to these tools. And the big nuance is that, let's just use an example. You started with crypto and you put money into Coinbase. And then you say, hey, I want to get access to other coins. Coinbase only has 4 coins right now. Clearly, earlier in the year, they only had 1 or 2. And you went out and you moved that money from Coinbase, let's say, to Bittrex, and you started to do some trades there about getting into other different tokens. What happens is the tools and Coinbase and any reporting that is automatic will account for the money that you move from your wallet to your other wallet as a sale. So there's manual accounting that has to be done on every single client that we work with. It's never just a matter of set it and forget it. Let me use this tool, and all of a sudden everything is going to reconcile properly. So you have to kind of go with what you know as a starting point, and then manually tweak it. And our professionals help handle that for you. You can clearly go out and research it, but the two tools are, and we've got high-level relationships with the CEOs of both of these companies, is cointracking.info and bitcoin.tax. They're both great tools. Bitcoin.tax is more for people that have less exchanges or less trades, and people that have more comprehensive day trading scenarios. Cointracking.info is a lot more complex to implement, but it's also got some more reporting features as well. So those are the two that we use, and we have our own tweaked version of those tools that we're able to have clients give us access to the reporting from there, and we help. Part of our process is we kind of walk people through on exactly how to use them, because both tools are great, but even learning how to use them is a whole nother, we'd have to do a whole webinar just on that.
Definitely.
Kevin, the other thing on both of those tools is it's not just the data, it's actually making sure you get everything in there. So one of the things that we do is not just limited to those tools, but we actually export their data into another series of tools and walk through to identify gaps in data. Like you may have forgotten an exchange that you had. You may not have put in your wallet information in there. And if you don't put that in there, all these software can tell is it went from an account you own to one you don't own. And as soon as that happens, it makes the assumption that that was either a sale or a transaction and triggers that capital gains. But if you're just downloaded into your ledger or your Trezor, then you don't want that to count. You want that to still be in a long-term, because the tax rate between short-term gains and long-term gains is significantly different. So the more you can show ownership and trace of ownership of those coins, you want to keep it as yours. So part of our job when you hire us to help is not only do we help you get all that connected so you can see it and use it, but we also help you to go through it and analyze, wait, there's gaps here. There's coins you sold that you never actually owned. We got to go back and get the cost basis for those, because maybe you forgot an exchange or you forgot a wallet that you didn't add it in there. And then once you get the data, actually understanding what to do with it from a tax standpoint. And as Mario said earlier, we have all of our tax returns reviewed and signed by a licensed CPA. So you get free audit assistance. You get the confidence in knowing that you've got a certified professional that's signed off on your return and said, yep, this is right to the best of our ability and how we're presenting this information.
We also guarantee the accuracy of every return. So if there ever was a mistake as a result of our preparation of the return, we would pay any penalties and interest that were incurred on that. So we've got you back 100% when it comes to backing up our work.
Awesome. Thank you. Okay, and just to wrap things up, I saw on your website that there is a drawing for a brand new Tesla. Can you just share with the viewers what that's all about?
Sure. So all Happy Tax customers, so sweepstakes laws say that anyone can enter any contest, and you have to, by law, enable anyone to enter a contest without the requirement for a purchase. So you can go to happytax.com/sweepstakes. or you can actually go to cryptotaxprep.com, and the Tesla contest is on there as well. And anyone can enter, and we'd hope that everyone here in the group would enter. But if you become a Happy Tax Crypto Tax Prep client, we give you 100 bonus entries. So that we want clearly one of our people that have chosen to work with us in that context to hopefully win. We are giving away a 3-year lease on a Tesla S. You get to pick the color. And that's kind of what the contest is. You also can get additional entries for social sharing of the contest. So anybody that you refer into the contest, you get a bonus entry into that contest each and every time that happens.
Awesome. Great to hear. And finally, so obviously in 2017 is the year where a lot of the mainstream public in the United States went into cryptocurrency. So there's not that many crypto tax prep services out there. And so I guess as a concluding thought from your end, why is Happy Tax, or I guess before that, I know you shared a lot of important information that can just help people regardless of whether they decide to work with crypto tax prep from Happy Tax or not. But why should people consider Happy Tax as the company to go to for filing cryptocurrency taxes as well?
Well, I would say first off, because we have been in the space ourselves for a number of years, so we know kind of what's out there and what's happening, and have kind of shared in the growth of the space, and it's really exciting to be part of that. And the next thing I'll say is that we're really the only national company. Our competitors the traditional competitors barely know what crypto is. There are a number of really great independent providers out there that might be CPAs, they might not be CPAs. There's a couple dozen providers out there that are basically like one man or one woman shows, and they do have some expertise in crypto. Most of them are either charging a whole lot more or not taking on new clients because they're so busy. We built our company, and I've always in my entrepreneurial career built companies for scale. So we've got over 100 plus people ready to help all the traders, and it's 15 million people on Coinbase alone. So we're continuing actually hiring additional staff because the demand is there, and looking forward to helping people to stay compliant, not get in trouble, and continue to stay focused. I'll also say, kind of on a side note, paying tax is a good thing. It means you're making money. If you're not paying tax, it means you're not making money. So I love paying taxes because it means I'm making more money. So it's actually a good thing, and we would hope that everyone kind of don't get freaked out about, I got to pay taxes. It's a percentage of what you're earning, and if done properly, it could be minimized. There's a lot of advisory stuff. Our solution is not only tax prep, it's the bookkeeping, it's the accounting, it's the tax prep of the entire tax return, not just the crypto part. So if you have whatever other income or deductions or credits is all included in the solution. And then there's advisory. So if you need to touch base, if you need to do estimated payments to avoid any interest or penalties, if you're making more than $1,000 that you haven't withheld taxes on, you have to pay quarterly. So if you're making money on stuff like that, and by the way, I don't know if this question came up, but it's a very important one. If you're holding your crypto and you haven't sold it, or you haven't exchanged it for another coin, there's no tax reporting requirement. So if you just bought Bitcoin or Ethereum or you name the coin and you're still holding it, you don't have to do anything until you sell it. So that's one of the benefits of that. But you just need to stay compliant, stay out of trouble. We're here to help, and we love the opportunity to earn people's business. And with that, even if somebody doesn't want to use us, hit us up, let us know what we can do to help. We're here for questions and whatever we can do to help the community.
Awesome. Thank you. And with that, this concludes our live stream Q&A. I wanted to thank everyone who joined us live. And if you weren't able to catch us live, you can also watch this after the fact. So please do that. And as I mentioned at the beginning, we have a special tax group on Facebook. It's facebook.com/groups/crypto tax support. And so you can find that in our linked groups up top on the Facebook group as well. And with that, I just want to thank Mario and Scott for taking the time out of their busy days to do this event. And they'll also be in the group answering any questions you have. So thank you all.
Thank you, Kevin. Have a great day, everybody.
Thank you, Kevin. You guys have a great day.
Thank you.